Digital banking has become one of the most transformative forces in modern finance. It represents a deep change in how people interact with money institutions and financial services. At its core, digital banking is the delivery of banking products and services through electronic channels such as mobile phones, computers, and automated systems. This transformation is not only about convenience but also about access, efficiency, trust, and the future structure of the global financial system. Understanding digital banking financial needs requires examining people expectations, business demands, technological capacity, regulatory frameworks, and social realities. For many decades, traditional banking relied on physical branches, paper-based processes, and face-to-face interactions. These systems were slow, costly, and often inaccessible for large segments of the population. Digital banking emerged as a response to these limitations. As internet access expanded and mobile devices became widespread, financial institutions recognized the opportunity to serve customers beyond physical locations. This shift allowed banks to reduce operational costs while offering services around the clock. Customers no longer needed to visit a branch to check balances, transfer money, or pay bills. These changes reshaped consumer behavior and redefined what people expect from a bank. One of the most important financial needs driving digital banking is convenience. Modern life moves quickly and individuals want financial services that fit into their daily routines. Digital banking allows users to manage accounts at any time from almost any place. This convenience is not a luxury but a basic expectation, especially among younger generations. People expect instant notifications, quick transfers, and simple interfaces. When these needs are not met, customers often move to institutions that offer better digital experiences. Another key financial need is accessibility. In many regions, traditional banking infrastructure is limited or unevenly distributed. Rural areas, small towns, and underserved communities often lack sufficient bank branches. Digital banking provides an alternative path to financial inclusion. With a mobile device and an internet connection, individuals can open accounts, receive payments, and access basic financial tools. This has significant implications for economic development, poverty reduction, and social participation. Financial inclusion through digital banking helps people save, securely manage risks, and participate more fully in the economy. Security is also a central financial need in digital banking. As financial activity moves online, concerns about fraud, identity theft, and data misuse grow stronger. Customers need confidence that their money and personal information are protected. This has led banks to invest heavily in encryption, authentication systems, and real-time monitoring. Biometric verification, advanced algorithms, and behavioral analysis are increasingly used to detect suspicious activity. Meeting the need for security is not only a technical challenge but also a matter of trust. Without trust, digital banking cannot succeed. Speed and efficiency represent another major financial need. Traditional banking processes often involve delays, paperwork, and manual approval steps. Digital systems streamline these processes by automating tasks and integrating data flows. Loan applications, payments, and account updates can be processed much faster than before. For businesses, especially small and medium-sized enterprises, speed can determine survival and growth. Quick access to credit-efficient payment systems and real-time financial data help businesses operate more effectively in competitive markets. Cost efficiency is closely linked to digital banking needs. For banks, maintaining physical branches and large staff structures is expensive. Digital channels reduce these costs and allow institutions to offer services at lower prices. Customers benefit through reduced fees, better interest rates, and more transparent pricing. In many cases, digital-only banks operate with leaner models and pass savings on to users. This cost efficiency is particularly important in price-sensitive markets and during periods of economic stress. Personalization has become an increasingly important financial need. Customers expect services tailored to their individual situations, goals, and behaviors. Digital banking enables personalization through data analysis and customer profiling. Banks can offer customized financial advice, spending insights, and product recommendations. This shifts the relationship between banks and customers from transactional to advisory. People want guidance on saving, investing, and managing debt in ways that reflect their real lives. Digital tools make this possible at scale. Another critical aspect of digital banking financial needs is integration with daily life. Financial services no longer exist in isolation. They are connected to shopping, travel, work, and communication. Digital banking platforms integrate with payment systems, e-commerce services, and budgeting tools. This creates seamless financial experiences where payments and financial decisions happen naturally within other activities. For example, instant payments during online shopping or automatic bill payments linked to income flows reduce friction and mental burden for users. Trust and transparency are essential needs that shape digital banking. Customers want clear information about fees, terms, and conditions. Digital platforms can present this information more clearly and allow users to track transactions in real time. Transparency builds confidence and reduces disputes. However, digital systems can also feel impersonal. Banks must therefore find ways to communicate clearly, provide support, and demonstrate accountability even without physical interaction. Regulatory compliance represents an important institutional financial need. Digital banking operates within complex legal frameworks designed to protect consumers, ensure stability, and prevent financial crime. Banks must balance innovation with compliance. This includes identity verification, data protection, anti-money laundering measures, and consumer rights. Regulators also face new challenges as technology evolves. Effective digital banking requires cooperation between financial institutions, regulators, and technology providers. The financial needs of businesses differ in some ways from those of individual consumers. Companies require digital banking services that support payroll, supply chain payments, foreign exchange, and cash flow management. Real-time access to financial data helps businesses make informed decisions. Digital platforms can integrate accounting, inventory, and payment systems. This integration reduces errors, improves efficiency, and supports growth. For small businesses, digital banking can level the playing field by providing tools previously available only to large corporations. Cross-border transactions highlight another important digital banking need. Globalization has increased the movement of money across countries. Traditional international transfers are often slow, expensive, and opaque. Digital banking solutions aim to make cross-border payments faster, cheaper, and more transparent. This benefits migrant workers, international students, online businesses, and global investors. Meeting this need requires collaboration across financial systems and regulatory environments. Education and financial literacy are often overlooked but vital needs in digital banking. As services become more complex, users must understand how to use them responsibly. Digital platforms can offer educational content, budgeting tools, and alerts that promote better financial behavior. Empowering users with knowledge helps prevent over-indebtedness, fraud, and misuse of financial products. Financial literacy also strengthens trust and long-term relationships between banks and customers. Technology infrastructure underpins all digital banking needs. Reliable networks, secure systems, and scalable platforms are essential. Downtime, errors, or security breaches can quickly erode confidence. Banks must continuously invest in technology upgrades, maintenance, and innovation. This includes cloud computing, data analytics, and system resilience. Meeting financial needs in the digital age is not a one-time effort but an ongoing process of adaptation. Social and cultural factors also shape digital banking needs. Attitudes toward technology, privacy, and money vary across societies. Some users prefer simplicity while others value advanced features. Trust in institutions differs by region and history. Digital banking solutions must be sensitive to these differences. A one-size approach rarely works. Successful digital banking aligns technological capabilities with cultural expectations and social norms. Economic conditions influence digital banking financial needs as well. During periods of uncertainty, people seek stability and control over their finances. Digital tools that offer budgeting, alerts, and savings support become more valuable. In times of growth, users may focus on investment opportunities and wealth management. Digital banking platforms must be flexible enough to respond to changing economic environments and customer priorities. The future of digital banking will continue to evolve as new technologies emerge. Artificial intelligence, data analytics, and automation will further shape how financial needs are met. However, the core principles will remain. People want accessible, secure, efficient, and trustworthy financial services. Digital banking is a means to meet these needs, not an end in itself. In conclusion, digital banking financial needs reflect a broad transformation in society, economy, and technology. They encompass convenience, accessibility, security, speed, cost efficiency, personalization, integration, trust, compliance, and education. Meeting these needs requires more than software. It requires a deep understanding of human behavior, institutional responsibility, and long-term value creation. As digital banking continues to expand, its success will depend on how well it serves real financial needs while maintaining trust, stability, and inclusion.